Hello, hello. Welcome to CoinDesk's First Mover, the place to get the global scoops on today's action in Bitcoin, blockchain, and that other thing called digital assets. And of course, happy Bitcoin Independence Day. Yes, apparently August 1st, 2017 is known for the Bitcoin community's users is demonstrating their independence by initiating the network's first ever user-activated soft fork. Yes, look it up because that's kind of a mouthful. I'm CoinDesk regulatory reporter Amitot Singh, filling in for Jen Sinasi. Joining us, of course, as always, are the regulars. I'm here with my co-host Emily Parker, CoinDesk's Executive Director of Global Content, and Lawrence Lewitton, Director of Content of crypto data company The Tie. How are both of you?
Good afternoon and good evening. I mean, everyone's spread all over the world, and I'm just the only one here, I think, in North America. So, good evening.
Yeah, we're a global show. I'm in India, Emily in Japan. This is amazing, which is why this is a global market. And we're going to start with Bitcoin as we always do. Let's just take a look at what's going on. The CoinDesk Bitcoin price XPX index is currently at about 28,000, falling about $150 in the past few hours. The CoinDesk Ether price ETX index is at about 1,800, falling about $30 in the past few hours. And the DFX CoinDesk DeFi index is at about 125. All right, let's look at our top story. What's going on? The presidential hopeful and Florida Governor Ron DeSantis, that's who we're talking about. He said he will end the Biden administration's alleged war on Bitcoin and cryptocurrencies during a campaign event in New Hampshire. Now, DeSantis has previously also promised to ban CBDCs if he's elected. Emily, I know you have a lot of thoughts about that.
Yeah, how much time do you have? I mean, basically the upshot is this is his whole part of, I guess, fighting for freedom. If you look at his comments, he's saying that he's implying that Biden is not allowing Americans to invest in cryptocurrency, which, as far as I know, is not the case. And so I guess that's basically what this is about, is giving people the freedom to invest in crypto, which, again, I don't think that's something that Biden is preventing. Obviously, there's a lot of criticism of the Biden administration, how it's handling the crypto industry, but I don't necessarily think that's what DeSantis is referring to.
I don't. I mean, quite honestly, I don't know if the only time DeSantis cares about anything is whether or not it wants to wear a dress, and he's going to have to deal with his own. He's first got to get past the primary before he can start commenting on stuff like that. I think that's his biggest concern.
I think one thing that's a little bit interesting about this, though, is this question of, is there actually anybody in the United States who votes based on a presidential candidate's stance on cryptocurrency? Right. So I think that's kind of what's interesting in this is, like, I guess somewhere implied in these comments is that there's some constituency out there that cares about what the stance is on Bitcoin or crypto. So
it's the ones who give them money. You want to count how many people care about crypto as in their voting? Just count up all the votes that Brock Pierce got in 2020. That's literally the total amount of people that actually vote on crypto.
I wonder if it's got to do with the Big Tent strategy that helped Joe Biden win. When you have everyone already supporting Donald Trump in the Republican side of the aisle, he's got to try to get votes from anywhere and everywhere. And this is, perhaps one last effort. But that doesn't make sense either. I agree. Yeah.
It's not even even being in the Big Tent. It's just the line to the outhouse. I mean, it's a very small group of people compared to the Big Tent. All right.
This is not an election show just yet. We still have time for that. Let's get down to what we're discussing, the big show, to the story that could have giant implications across decentralized finance. Curve Finance's token has fallen roughly 20% over the past 3 days after the stablecoin exchange at the heart of DeFi on Ethereum fell victim to an exploit. Joining us now to discuss is the co-founder of blockchain auditing firm BlockSec, Andy Zhou. Welcome, Andy.
Thanks for having me here.
It's our pleasure. Can you just first explain, take a step back, just explain to us how all this has happened? Because I know for sure that Lawrence is very upset how this can happen in the decentralized world.
Sure. I think this is because of the bug of the compiler used by the Cofinance to compile their smart contract. There's a compiler called a VY compiler. So this compiler is used to compile the decentralized application of Cofinance. And because of the bugs inside this compiler, some security mechanisms enforced inside the decentralized applications are not effective. So the attackers, they exploited these vulnerabilities, and to drain the pools and to, I think the loss is around 47 million US dollars because some of the funds have been returned by the white hat to the Cofinance.
How many pools were affected by this? Last I read it was 5, but is it more than that, or?
I think around 5. Yeah, I don't have the exact number, but it's around 5.
And as far as that goes, I mean, I guess, to what Amitaj is hinting at is sort of, I think we'll get into how or how Curve's founder basically came in, had to step up to save the situation. Can you explain that? And also, how can something be called decentralized if it requires the action of one individual to bail it out of these kind of problems?
Yeah, I think you made a very good point. So basically, the Cofinance, the decentralized application of Cofinance, they do not have an emergency mechanism to pause the protocol because this is a decentralized world, right? Everyone wants that. We cannot have a centralized role to control this. But in some cases like this, if something bad happens, we have no way, we have no last resort, to solve this issue. So I think this is one lesson we learned from these security issues. We cannot just say we have pure decentralized world. We need to have some last resort to prevent something bad happen. And I think another lesson we learned from this security incidents is that we cannot always trust the infrastructure we use to build our decentralized applications, because whether this infrastructure has been well tested or well evaluated are still unknown. We should put more resources, to evaluate the security of these infrastructures, which decentralized applications are relying on. So this is, I think, the lessons learned.
I've seen a bunch of things to that point. There are a lot of things floating around the Twitter sphere, or X sphere, I guess is what we have to call it now, showing potential vulnerable pools out there. Does that help? I mean, there is some criticism, people saying, why are you telling other people where these vulnerabilities are, and you're just inviting hackers?
Okay.
But is there a method by which people can say, hey, here are some vulnerable places, here's how we could check the code, etc.? I mean, do we have to kind of wait for these iterations and attacks before the market gets it right? How long will it be? Months, years from now, before we have these foolproof mechanisms in place to keep hackers from essentially attacking these pools?
Yeah, that's a very good question. So let me be very clear. So we are not alerting the vulnerabilities of the Cofinance. We are alerting an ongoing attack of the Cofinance. It's a very different. So the vulnerability means that there is a loophole inside the decentralized application, but no one has exploited this loophole to gain profit. An attack means that someone is already find this vulnerability and perform attacks. So basically, we need to alert the ongoing attacks, not the vulnerabilities. That's because if we alert the vulnerabilities, the bad guys, the bad guys, they will exploit these vulnerabilities because it's not public. But for the attack, we think it's necessary to alert the attack because the attack is currently happening. That means the bad guys already figure out everything, and we need to alert the users, to withdraw their funds immediately from the pool instead of just waiting to be drained everything, every tokens, every assets they have. So this is the critical difference between the vulnerabilities and the hacks.
Mm-hmm.
So just to follow up on Lawrence's question here about, centralization versus decentralization, and just looking at the larger picture here for the vast majority of the planet who has no idea how to make sense of this, why does this keep happening? There's so many hacks. A lot of them have been aimed at DeFi. The whole idea of DeFi, right, is to avoid a honeypot. It's decentralized, right? There's not one central thing. That's the whole, it had one job kind of, So why does this keep happening? What's the common theme through all these hacks?
Yeah. I think every coin has two sides. So from one side, the decentralized things means that we do not need to trust one single person like the centralized world. But from another perspective, the decentralized means the decentralized and openness means that everyone can interact with the protocol. Everyone can find the vulnerability of the protocol, and everyone can attack the protocol. Right. So if it's centralized and applications, then you may need some permissions, to interact with this protocol. But for decentralized application, everyone can attack. Everyone can attack the protocol if there is a vulnerability. So this is a dark side of the decentralized world. So in summary, I think we have two sides of a coin: the good side and the bad side. So we cannot just say decentralized is good or bad without consider all the advantages and the disadvantages.
All right. Curve founder Michael Egorov has floated a new liquidity pool to buy time, and Justin Sun, the founder of Tron, the usual knight in shining armor of crypto, has purchased about 5 million CRV. What does that mean? Is that a placebo effect or the medicine?
Oh, that means that because the price of the CRV token is decreasing, so he needed to put more tokens as a collateral in order to be avoided to be liquidated, because the value of the collateral is decreasing. I think this the consequence of this may be unknown. We will see, because whether they will affect other ports are still unknown. And whether there are some other consequence will cause, we are unknown about this.
BlockSec tweeted about the re-entrancy bug in Viper, a programming language. I'll say that again: Viper, a programming language used to power parts of the Curve system. Why is this significant in this entire incident event?
Okay, that's because many applications are built using this compiler, right? So if there is a bug inside the compiler, even the developers of the application, they do not make any fault. But because of the bug inside the compiler, the generated decentralized applications will be buggy and will be vulnerable, will be attacked. That's exactly the case of how co-finance is. Right, so the decentralized application is right because they use a knock to prevent the re-entrancy, but the compiler has bugs. The compiler doesn't enforce the correct logic of the decentralized applications. That's the issue, and it's a fundamental issue.
Now, my understanding is if we get down to below 37 cents on Curve, the CRV, that we're going to have that he'll be liquidated. Do we know about some of the after effects that could happen in that case, or is that still remains to be seen?
I think we will wait to see. So I cannot give you the exact consequence currently.
Okay. All right. Okay, thank you, Andy. That was great. That was the co-founder of BlockSec, Andy Zhou. Thank you very much for coming on. Coming up, we'll take a closer look at crypto's performance in July after the break.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, check it out. Bitcoin is currently trading below $29,000, losing roughly 5% in the past 30 days. Well, joining us now to discuss how the crypto markets performed in July is CoinDesk Indices Head of Research, Todd Groth. Welcome, Todd.
Thanks for having me.
Glad to have you back. So, of course, you say that the main catalyst for the month was actually Ripple's partial court victory against the SEC. Can you unpack that for us? And, well, I guess how did it do relative to, I don't know, the ETF situation that happened in June?
Sure. Yeah. So I think what we had in July was a reversal of the Bitcoin dominance we saw from all the positive headlines in June, most notably the BlackRock ETF filing, and really while the Ripple outcome was it was partially positive. It was still deemed a security to institutional investors because of the contract involved in the initial sale of Ripple. What it basically did was it allowed for a lot of the altcoins to catch up with where Bitcoin was and even Ethereum relative to the smaller cap universe. And so with that, as you mentioned, Bitcoin down 5%, Ethereum down 3% on the month. But the broad CMI, which is Bitcoin, Ethereum market cap weighted, so those are large tokens within CMI, CMI was only down about 1%. And that was really driven by computing sector, DeFi, and digitization, which have the smaller tokens relative to currency and smart contract platform where Bitcoin and Ethereum reside.
So that analysis makes a lot of sense. I'm just curious, like in your observation, though, my personal observation is that whatever the SEC does doesn't seem to affect Bitcoin that much. Now, what you're talking about a little bit is different because it's like Ripple and altcoins, but I'm just curious if you share that view because sometimes like even when the SEC, and the Coinbase and the Binance lawsuits, they named all these different altcoins. Like, I mean, I guess it affected those coins, yes, but it doesn't really seem to affect Bitcoin that much. I mean, do you agree with that statement?
Absolutely. I mean, you even look at what came out with Coinbase, the dialogue between Coinbase and the SEC. It was delist everything except for Bitcoin. And I think Bitcoin's more global, more decentralized. In that sense, when these individual targeted investigations and actions occur, it's very specific towards tokens outside of Bitcoin, and to some extent Ethereum. I think Ethereum still. There could be a tail case where the SEC goes after Ethereum as security, but it seems it's always an ex-Bitcoin event. Exactly to your point.
And if you could just talk to us a little bit about the broader macro factors, particularly the interest in central banks, interest rates, what's been going on, what have you seen?
Sure. Yeah. So we had the July FOMC, which 25 bips as consensus. There was a little bit more hawkish communication towards the end. It sounded like we're going to have higher rates for a little bit longer. I think the committees are still split between the doves and the hawks, but it seemed on the margin, it was a little bit more of a hawkish rhetoric, just to make sure that the markets wouldn't get overly dovish take from it. And then last week, I think what was notable was the Bank of Japan adjusting their yield curve control. To allow for the 10-year JGB to stay within their target, but then allow for rates up to 1%. So effectively reinflating a lot of yield into the JGB curve. Now it's still negative. It's still negative real yield if inflation is 2%. But that's meaningful because that is of the different central bank programs, the Bank of Japan is furthest out in terms of just of yield suppression across the curve. So that was notable to see the BOJ relinquish some of the control that they've had on that market. And whenever we see rising rates, and we've seen this globally across the US, Europe, and the Japan curve, whenever we have rising nominal and real yields, that's generally negative for crypto, as crypto is viewed as an alternative better in a zero interest rate environment. But that negative macro effect is offset by what we're seeing is continued US dollar weakness. and more broadly, just still positive risk sentiment for both equities and credit within the U.S.
All right. Well, thanks so much for that, Todd. That was CoinDesk Indices Head of Research, Todd Groth. Coming up, the author behind a new book that says crypto should be understood not as cryptocurrencies, but as data monies. And this author also proposes a framework for regulation that the world should follow. That conversation coming up next.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
I'm very pleased to welcome the author of a brand new book, Data Money Inside Cryptocurrencies, Their Communities, Markets, and Blockchains. Welcome, Koray Caliskan. Congratulations on your book. It's a very big deal to publish a book. I know this isn't your only one. I just want to kind of start with kind of a very big question here, which is that you note in the book that you spent some time in a detention center and also under house arrest in Turkey. And I'm wondering if that personal experience in any way informed your views about crypto and the use cases for crypto.
Hi, Emily. Thank you for having me. I don't think they're related to each other. It was about my writing in Turkey, and that was like many years ago, like 5-6 years ago. And I don't think the research and the conclusions and this experience are related, but thank you very much for recognizing it.
Okay, just wondering, because sometimes, people's views on crypto are shaped by those kinds of experiences. So we thought we would ask you. But okay, let's get to the book then. So the book really emphasizes the importance of referring to cryptocurrencies as data money. And you really make a point about why this definition is really important and this term is really important. Can you explain sort of in the most simple way why it matters that we call this data money?
Thank you. This is a great question and a wonderful way to start it. I think we're misunderstanding, misrepresenting, underregulating, and misregulating crypto because we fail to understand what it is. Today, it's like 13th century again. Marco Polo comes back to Venice and tells us that, look, there's a new money material. It's paper. And some people who think that only metals can be money, like silver and gold, keep describing cryptocurrency or paper money that Kubilai Khan invented in 13th century as some kind of a gold, some kind of a metal, soft gold, soft metal, with analogies. We are witnessing a new money material. We are monetizing the right to send data. This is not digital money or online money. Cryptocurrency is cryptocurrency. We don't have to change the name. But social scientifically, we need to locate its money material and the accounting infrastructure that it entails. Because they do not understand the money material that cryptocurrency is made, we also tend to misunderstand what it is. Very much like the parable of the blind man. For instance, SEC calls it a security like an asset. IRS calls it a property. CFTC calls it a commodity. Some economists call it money. Some people call it not money. Electronic money, which is fine. We are prototyping what cryptocurrency is. We are in the beginning of the second decade of cryptocurrencies. My research that entailed a computational text analysis, 2 years of fieldwork among communities and one of the largest exchanges in the world, and also talking to many actors, showed us that we invented a new money material. And it is data money. Because
that's a great explanation, and I agree with you that the emphasis on data is important. However, I do think that some people don't think of cryptocurrency as a money, not for the reasons you said, just because like people aren't using it to buy things. Like it's actually more simple, right? Like it's not like, I see what you're saying, that some people might not think of it as a money because it doesn't look like gold or dollar bills or whatever. But I think some of it's just way simpler. Is that like, the idea of Bitcoin is you're supposed to use it to you can use it to buy things and to pay for things, and people just aren't doing that. And that's one of the main arguments against Bitcoin, is that it's just not being used in the traditional form of money.
That's a very good point. However, there are three different functions of money: as debt, as currency, as fiat. And in some places, cryptocurrencies are used for money for exchange. In others, they're used for deposit of value. In others, they are used as debt. We don't use most of US dollars for buying things. It is used to represent movements of capital. We create US dollars digitally as debt. You can't just touch it, and you can't buy bread with it. Most of US dollars are used as a representation of value in order to move our economies anyway. We are looking at a new type of fiat currency, and in the future, we're going to be seeing its enlarging importance.
So you did have an experience, though, a personal experience, which would probably affect your view of crypto, and that is, of course, inflation. I remember the days of the Turkish lira being $1 million or so to $1, and going up a lot, going down in value from the times when we had Turkish lira coins. And it was within your lifetime, your money went away, your value went away. But you're talking about regulating cryptocurrencies, and nonetheless, one of the appeals about cryptocurrencies is that it's transnational. So how do you square those two ideas? How do they work together? The idea of a transnational currency, and yet at the same time something that can be regulated by states, which have shown there in many instances, as your experience has shown, to not be good stewards of their monetary policies.
Lawrence, great question. And I really like your Turkey guide behind you. I watch your show and it's just next to, I really love it. I'm actually in Turkey right now, right in the middle of all of you. Amitaj is in India, so good evening, good morning, good night, Japan. That's a good question. I think if we assume a national fiat currencies to be hegemonic and dominant, we address this question in one way. If we think that we enter a multiple monetary universe in the future, we address this question in a different way. In Turkey, we had a huge inflation. We still have. Right now, I bought something, but while I was waiting, dollars value went up, and then Turkish lira value of what I bought also went up. It was really crazy. I don't think cryptocurrencies will be for or against inflation, or helping or not helping inflation, because it depends on how fiat currency could be used. Right now, we do not have central bank data money. Because of this, the state has to wait until all data monies are converted into US dollars, because the money that the state, thus the public, uses is slower and low-tech compared to data monies or cryptocurrencies that we use right now. In the future, very much like merchants in Venice realized the importance of paper money, they convert their gold and silver coins into paper money, and that an international community began to use paper money. We're going to be using data money and its variety of forms. It's only less than 2 decades since this thing started, and we're still learning and prototyping. Our politicians do not understand what's going on. I was watching your program 2-3 days ago. One of the senators said, I wish our central bank would never have a cryptocurrency, a central bank digital currency. Nothing could be wronger than that, because if you do not have this, you cannot follow the movement of new monies, data monies, as fast as they move. The public needs to have also a central bank digital currency, the nature of which is going to depend on our democratic procedure of discussing the meaning and the uses of a multi-money universe in our new economies.
I just want to congratulate you on the book, of course, because the way I read the introduction of a 230-page book was where you talk about how you spoke to 112 people and only 2 came on record. You were embedded yourself in a crypto exchange that you did not name to protect your sources, of course, which we as journalists obviously understand. But I just want to separate 2 things out here, because you're obviously talking about, in the book, global regulation, and you're also talking about US regulation, where the SEC and CFTC, of course, and the Congress emerge as the leaders. And the 2 separate questions I have. I'll get to the first because it's slightly technical. And the context behind this is that the G20, where India is the president right now, is leading the conversation on framing global rules. And it's kind of putting it out there that it represents the global south, the emerging economies, as opposed to the advanced economies, the G7s, Japan and the US and European countries. And in the book you write, my research shows that the proliferation of cryptocurrencies is in fact supporting the dollarization and euroization of world trade, not posing a threat to sovereign fiat currencies. And this is exactly why global south nations, led by perhaps India, say they don't want to support the proliferation of cryptocurrencies. The Indian central bank governor said, this is exactly why we don't want to support it. So did you look at how dollarization and euroization, is not in the interest of some other parts of the world through crypto?
That's a very, very good question, Amitaj. We're just starting to carry out serious social scientific research. As far as I know, this is the only longitudinal analysis of a cryptocurrency community. This is also one of the first I believe it's the first ethnographical research, an extended research on how a cryptocurrency exchange works on the ground. I did research with an exchange for more than 6 months. We don't know what the impact is going to be on the non-West. For the time being, we know that most crypto communities are white, are Western, are male, and are very educated. The data is incomplete. We need to carry out more research about it instead of assuming it. However, Cryptocurrencies as a money material are better technological, drawing on better technological accounting mechanisms, blockchains. Thus, they are better in economizing resources in order to produce, circulate, and benefit from a variety of monies. Logically, this would help non-West and global South. But for the time being, the West is also quite slow in adopting this technology because we do not know how to locate legally and social scientifically this novelty. Marco Polo came up with paper money. Some of us say, oh, this is not gold. It can't be money. Nobel laureate economists like Paul Krugman says, cryptocurrency does not have real service. Nothing could be wronger than that. It brings a lot of service, material service.
All right. Well, thank you, Koray. Unfortunately, we're completely out of time. That was Koray, the author of Data Money. Congratulations on your new book. Thanks so much for joining us. All right. A federal judge has now denied Terraform Labs' motion to dismiss an SEC lawsuit, and with that, raised fresh questions about the partial Ripple victory. Joining us to discuss that is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. Nick, great to have you with us. That judge, he rejected the use of another recent ruling that said Ripple did not violate securities laws. You wrote that up at about 2 a.m. New York time. What else did the judge say? What's the meaning of that?
Hey, good morning. Yeah, so this was as you noted, the ruling in Terraform Labs' motion to dismiss a lawsuit from the U.S. Securities and Exchange Commission. A couple things to just kind of note right out of the gate. First off, this was just kind of an initial motion to dismiss. So the judge basically, was looking at, does the SEC have a plausible claim? Does it have standing? Things like that. It wasn't really looking at the, actual merits of the underlying case. Just is what's been filed so far sufficient to argue that the SEC has a case and it can continue to bring forward? And he ruled, yes, that is, in his view, accurate. So, yeah, in his, ruling, rather in their motion, Terraform Labs, first off argued that the SEC didn't have, standing. They tried arguing things like the major questions doctrine, which, of course, is the, recent Supreme Court ruling where they basically said that regulatory agencies can't dramatically exceed their mandate. More recently, Terraform Labs filed a brief saying, hey, look at this Ripple ruling where the judge said that, sales to retail investors through intermediary exchanges did not violate securities laws. And the judge said, in his view, that shouldn't matter if the buyer, the investors are, aware that at the beginning of the project, there is this central entity that, has managerial efforts that could impact the, price of the token. It shouldn't really matter where exactly those investors are buying the tokens from. He also pushed back against the major question doctrine usage in his ruling, saying that the crypto industry, while important, is not quite at the level of the other major industries that meet the major questions doctrine threshold.
So, just in terms of where it stands in the courts, this is another court. It doesn't actually change anything involving the Ripple case, correct? I mean, what does the conflict then do for people who aren't familiar with U.S. legal system, with how we work, with the kind of kookiness we got here?
Yeah. So you're right. There's no practical effect right now. This is a single judge's opinion on, again, a motion to dismiss. So the case itself is going to continue. There's still going to probably be, a trial. We're going to go through all the discovery. We're going to eventually get to a ruling. That could take years, as we've seen. The Ripple case itself, right? The SEC has already kind of signaled that it might appeal this ruling, in their response to Terraform Labs after Terraform, pointed to the Ripple ruling, said, the judge should rely on it. So even there, we might still have to go through a couple years of, appeal court processes, and depending on how far the parties are willing to take it, potentially all the way up to the Supreme Court. So as far as last night's ruling is concerned, think the crypto industry still should be in a kind of wait and see posture. There isn't going to be a whole lot that's hugely presidential about that. The more interesting question to me, honestly, is the major questions doctrine. That is an argument that a number of other crypto companies, including, for example, Coinbase, have used in trying to dismiss their own lawsuits from the U.S. Securities and Exchange Commission. And so, if other judges agree with, Judge Rakoff in that the industry is not, big enough to warrant it, that could be, kind of detrimental to these other companies' efforts to dismiss those lawsuits.
Yeah, we got to wait for the precedent there. Thanks so much for that, Nick. That was CoinDesk Global Policy and Regulation Managing Editor, Nick Day. And as we always say, and Lawrence particularly says it in the most exciting way and entertaining way, don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's the one that I was referring to.
I really undersell it.
I'm Amit Singh. Thank you to my co-hosts Emily Parker and Lawrence. And don't miss CoinDesk Spaces at 10 a.m. Eastern today. Focus on Bitcoin and China's declining yuan. That will be on X, formerly known as Twitter. First Mover returns tomorrow at 9 a.m. Eastern. Meantime, catch the hash today at noon from the entire team. You're watching CoinDesk TV, and thank you for doing so.